How's everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, we're going to be covering the White House Digital Working Group's report on digital assets. And I have a couple things here for everybody today. We're going to start with an article from Banking Drive, which covered the report, gives kind of a quick, rundown, gloss over of the report. Then we're going to look at this fact sheet put out by the White House, and then we're going to actually get into the report itself. But let's start here. Let's go back to Banking Drive for just a second. So, crypto appointed group calls for clear crypto regulation and tax changes. So, the long-awaited 166-page report detailed regulatory and legislative suggestions in the interest of the new American golden age. So, the White House Working Group on Digital Assets called upon regulators and lawmakers Wednesday to cement rules and regulations around registration, custody, and trading of digital assets in pursuit of the new American golden age. In 166 pages, the group called upon the Securities and Exchange Commission and Commodity Futures Trading Commission to use their existing powers to legalize cryptocurrency trading at the federal level. The report also urged Congress to draft legislation granting the CFTC authority to regulate spot markets in non-security digital assets, something a bill introduced by Senators Kristen Gillibrand and Cynthia Lummis tried to do in 2022. The group also said federal banking regulators, the Federal Reserve, the Office of the Comptroller of the Currency, Federal Deposit Insurance Corporation, and National Credit Union Administration should never again pursue the Biden administration's policies of Operation Choke Point 2.0 and should instead embrace the opportunities digital assets and blockchain technologies offer to banks nationwide. That referred to an alleged coordinated regulatory effort by the Biden administration to undercut the crypto industry by blocking it out of the banking system. Banking regulators should ensure risk management guidance is technology neutral and should relaunch efforts to provide clarity on activities banks want to pursue, the report said. To support these efforts, the United States should adopt capital requirements for bank digital asset activities that accurately reflect the risk of the asset or activity, the group wrote. The relevant federal banking regulators should provide clarity and transparency regarding the process for eligible institutions to obtain a bank charter or a reserve bank master account. So now let's take a look at the fact sheet. So the President's Working Group on Digital Asset Markets releases recommendations to strengthen American leadership in digital financial technology. So the group was created through this executive order. Now, what are some of the key things that they were looking at in this report? Well, positioning America as the leader in digital asset markets. They also looked at modernizing bank regulation for digital assets, strengthening the role of the U.S. dollar as it relates to digital assets. Now, obviously, they passed the Genius Act that has to relate to stablecoins, particularly payment stablecoins. I've covered that in other episodes. If you want to go back and take a look at that I just did within the last week. ICBA actually put out a great guide covering the Genius Act itself, like implementation timeline, what's in it, why it matters to banks and financial institutions, what it does and doesn't do. So if you get a chance to check that episode out, go check it out. It has a lot deeper detail and explanation on that topic. But this report also looks at combating illicit finance in the digital age, obviously a major issue. So by modernizing our anti-money laundering rules, the United States can be a leader in financial innovation while protecting our national security interest. And we'll get into recommendations in a little bit. But then finally, it looks at ensuring fairness and predictability in digital asset taxation. So our tax rules must align with new technologies and eliminate compliance hurdles for both individuals and businesses engaged in activities involving digital assets. So, and again, the working group has a couple of recommendations around that. You didn't think they weren't going to tax this, did you? Government met it. The government has never met a tax it didn't like. Okay, so here's the actual report itself. Again, 166 pages, so this is a rather lengthy report. So you can imagine in a short video, I can't go through this whole thing. I'm just trying to give you guys, give everybody a quick once-over, as it were. But this is called Strengthening American Leadership in Digital Financial Technology. And then here, I'm going to make this a little bit smaller so that we could go, but we'll go rub through this. So this is the table of contents, and it basically goes through the digital asset ecosystem, digital asset market structure, banking and digital assets, stable coins and payments, countering illicit finance, and then finally taxation. And then at the end, it has a table of recommendations, which we are going to jump to in just a minute. But again, there's a ton of really good information in this report. If I were to go through the whole thing, it would probably take me over an hour just to run through everything and just to give you a taste of some of that. Now, this is helpful in the report. It has a couple of pages here of acronyms and abbreviations, because obviously, as you can imagine, there's a lot of jargon in this report. So great that they put that right up front. But then it just goes into it. It talks about who was the working group. It gets into a general introduction. Comes down here. Now, a couple of things I want to hit on here in the introduction that it speaks at is basically says American citizens and businesses should be able to own digital assets and use blockchain technologies for lawful purposes without fear of prosecution. Likewise, American entrepreneurs and software developers should have the liberty and regulatory certainty to upgrade all sectors of our economy using these technologies. Policymakers and market regulators should lay the groundwork for American digital asset markets to become the deepest and most liquid in the world. Banking regulators should never again pursue the Biden administration's policies of Operation Choke Point 2.0 and should instead embrace the opportunities digital assets and blockchain technologies offer to banks nationwide. U.S. dollar-backed stablecoins represent the next wave of innovation in payments, and policymakers should encourage their adoption to advance U.S. dollar dominance in the digital age. U.S. law enforcement agencies should have the tools and authorities to hold those who use digital assets for illegal activities accountable. These tools should never be misused to target the lawful activities of law-abiding citizens. And then finally, federal tax policy should recognize the unique characteristics of digital assets and address longstanding requests for guidance from investors and entrepreneurs. So now we move into kind of crypto 101. And it has some great charts here. Now I'll kind of blow this back up here a little bit so people can see this a little better. So this is like the software wallets versus the hardware wallets. Again, interesting chart. We get down here to Oracle Network for orchestration. Advanced blockchain applications. So again, really interesting charts. This one is kind of hard to see. It's upside down, but the phases of cryptocurrency and digital asset market adoption. So again, it's a very busy slide, if you will, a very busy chart, but again, really interesting history. A lot of great, interesting stuff in there. And then we get into chapter 2, the digital asset ecosystem. And again, some more interesting chart, cryptocurrency market cap through time, BTC spot ETF balances. You can see a lot of growth there. Basically market participants that are in there, issuers, retail participants, institutional investors, centralized trading platforms, decentralized protocols and development teams, blockchain network support. So it goes through all of that. And then, total value locked in decentralized finance protocols, architecture of decentralized finance. So the decentralized finance technology stack. So again, you can see here, just a tremendous amount of great information here. Example of a liquidity pool right here. I could talk about this for 25 minutes, but, liquidity provider, trader, deposit swap, Uniswap pool, very interesting stuff. Mining and staking. So that's, again, another great topic there. Staking and proof of stack. Key infrastructure providers and tools. Key regulators and oversight. Federal, again, goes into, federal market regulators. But I'll tell you what, let's jump down to, because again, we could talk, custodian wallet, clearance and settlement, lending, borrowing, and collateral, trends in crypto lending right here. You can see interesting chart there. Commercial applications, tokenization. Obviously, something I've talked a lot about. I've done a couple episodes on tokenization. But like I said, let's get down to where do I want to go to? I need to get to page 141 here at the bottom. All right, where's this at here? Come on, where are we at? Okay, table of recommendations. So now this is good because it does digital asset market structure. It gives you the recommendation. It gives you immediate actions. And then over here on the right, it basically tells you the policy responsibility, either Congress or a regulator. So, so enabling the trading of digital assets at the federal level, immediate actions, the SEC should consider using its rulemaking and exemptive authority under the Securities Act to advance the following initiatives. And there's a ton of them in here, so I don't want to run through them all. The SEC should also consider using its rulemaking and exemptive authority under the Exchange Act to advance these following initiatives. Again, more stuff, a number of initiatives around digital assets. More recommendations. The SEC should consider using its rulemaking and exempt authority under the Investment Advisors Act, the Investment Company Act, and other applicable laws to advance the following initiatives. And then it gets to the CFTC, should consider using its rulemaking, interpretive, and exemptive authority under the Commodity Exchange Act to advance the following initiatives. Digital asset market structure. And then it goes into kind of long-term considerations, judicial and market regulators. And this gets into Congress and both the SEC and the CFTC. Guidelines for market intermediaries. Further recommendations. Let's see here. Regulatory treatment of decentralized finance. Congress, as contemplated in provisions of the Clarity Act, which got passed by the House and is currently sitting with the Senate. Congress should consider the following factors when determining the regulatory treatment of decentralized finance: the extent to which a given software application exercises control over user assets, the extent to which a given software application, once built or deployed, is technologically capable of being modified, the extent to which a software application is controlled by or operates with a centralized structure or management, the extent to which a given software application is technologically or logistically capable of complying with current regulatory obligations. And then it goes down into accounting recommendations. So the working group observed that many questions on the accounting for digital asset transactions relate to the following key concepts that FASB would consider for further consultation through public engagement. So then it has a number of recommendations there for FASB. And I think, nope, still going. Current regulatory framework. And this gets into the Federal Reserve, the FDIC, and the OCC, relaunch agency crypto innovative efforts as appropriate to address outstanding bank activities. The initial activities and topics to consider include, custody of digital assets, third parties, holding stablecoin reserves as deposits, principal activities, pilots, tokenization, permissionless blockchain. And then it goes into encourage innovation in banking technologies and products by state chartered banks. Then we get down into developing guidance and best practices to support banks and supervisors that is technologically sound and principles based, clarifying the role of supervisors and banks in offering banking services to potential customers, access to providing bank services. It just keeps going. Capital and other applicable regulatory treatment, simplification of crypto asset grouping, use of permissionless blockchain for all groups of crypto assets. Review the calibration of capital requirements for credit risk, market risk, operational risk, and liquidity risk to incorporate empirical evidence of recent changes in crypto asset performance and risk. And then that continues to go on with there, some things for the Treasury. And then innovation in payments, central bank digital currencies, discourage, oppose, or prohibit the ability of any agency from undertaking any action to establish, issue, or promote a central bank digital currency in the United States or abroad. Obviously, we have the anti-CBDC bill, which got passed by the House and is currently sitting in the Senate, waiting to go through, which it mentions here. Promoting the competitiveness of the U.S. dollar, and then countering illicit finance, enhancing effective supervision, adopting BSA reporting to better account for digital assets, improving sanctions compliance with regard to digital assets. And then it just keeps going, applying Treasury authorities to digital asset ecosystem, tailoring law enforcement capabilities and authorities, advancing privacy through digital identity and related tools. And then it finally gets to taxation. So substantive tax issues, further recommendations there, taxpayer reporting, third-party information reporting, cybersecurity, repatriation and domestication of offshore foundations. And that's finally it. So we get down. What a report. Just incredible how much information is in this report, how much ground it covers. I might have to go, just because of the scope of this thing and how much information is in here, I might have to actually break this down into a couple of smaller episodes and go through a few of these chapters a little bit more in depth, especially the banking and digital assets chapter, the stablecoins and payments chapter, countering illicit finance, taxation. I could do episodes on each one of these chapters in here, but like I said, I just wanted to give everybody a quick overview of the report and what is in here. So if you want to check it out, I do have links in the description down below to the report and to the fact sheet. So if you want to go check them out, which I highly encourage you to do. But with that being said, I'll wrap up this episode by saying, if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to check out some of the other content on the channel. And I hope everyone has a great day out there, and I will see everyone again real soon. Thanks a lot.